welcome everyone to the Nordic Startup Conference 2022. We have hundreds and hundreds of people connected so far, which is great. So my name is Adam. I'm the founder of Startup Network Europe, and we make webinars for European startups, which attract thousands of founders and investors. Now, we actually kicked off 1 year ago with the Irish Startup Conference 2021. It went well, so we did more events across Europe in September and October. They went well, so we did some events in March, and we have more coming up across this year. Now, in addition to webinars, because thousands and thousands of startups and investors are coming to them, our dream is to transform the European startup ecosystem by creating the biggest and best online community for startups on the continent. And I'll share more information about that later. And I think it's very important. We'll have 2 hours of content today. You'll get lots of value, but following the 2 hours today, we want to give more value. So let's meet in September. We're going to do a Copenhagen Startup Conference in September, which will be a fundraiser for Ukraine. We'll do the same thing in Helsinki, the same thing in Stockholm. And these 3 events are face-to-face. They will be free to attend, and they will be fundraisers for a medical charity at the same time. So I hope to see you all there. Now, we can also network online, not just during these 2 hours, but for 365 days a year. We've made an online startup community called the Nordic Startup Community. It's free to join, run by full-time community managers. And our idea is to give you a community so you can ask questions, help people out. And there'll be member-only events, exclusive content, and connections with investors long-term as well. We're still in soft launch mode, testing things out, but it will have thousands of members within 1 or 2 months, and much more benefits as well. Now, we're going to share all that information, all the links in a moment at this link, startupnetwork.eu/Nordics. But let's get the show on the road. So our plan today is very simple. It's a 2-hour event with 27 different speakers in those 2 hours. In the first hour, we will have Nordic startup leaders, founders, VCs, and international scale-ups. And then in the second hour, we will have angel investors, accelerators, incubators, Nordic founders who went to the United States, and we'll also have 2 really interesting 15-minute discussions. Before I begin, it's very important that I thank our sponsors. This event wouldn't be possible without them. The first one is Personio, a HR software for startups and SMEs, which helps improve operational excellence to pave the way for strategic work to shine. That means accelerating daily work, reducing administrative chaos, and ensuring that every core HR process works like a dream. Amplitude is our second sponsor. They are a digital optimization system, and they have a trademark behavioral graph innovation, which sorts through millions of seemingly random actions to instantly find patterns of customer behavior and to predict outcomes and adapt experiences. And our third sponsor is Twilio, a cloud communications platform already used by millions of startups to engage with billions of customers around the world. Software developers can use Twilio to make and receive phone calls, send and receive text messages, and perform other communication functions using its web service APIs. And Twilio actually has a Twilio Startups program, which members of this event today can join. And you're going to get a lot of free credits and free resources. And finally, Freshworks for Startups provides integrated software solutions for startups and scale-ups. They're originally from India, now headquartered in California after doing their IPO in September. And they actually have a startup program for Nordic startups where you can claim up to $10,000 in credits. So thank you, Personio, Amplitude, Twilio, and Freshworks. Now to continue, we have a lot of people here from the Nordics, but also from Silicon Valley and other places. So a very quick introduction. It is 5 countries historically, with a combined population of 27 million people. Most of these are in the European Union, except Norway and Iceland. And the biggest country is Sweden, so there's over 5,000 verified startups in Sweden, according to dealroom.co. In Finland, 3,500, in Norway, over 2,000, in Denmark, over 2,000, and in Iceland, over 300 as well. And if we just look at Finland, which is our concentration for today, look at this growth in terms of VC investment. It is crazy. between 2010 and 2020, it looks like a growth of 10, 20, 30, 40 times. So startups are really on the rise in Finland and other countries throughout the Nordics. Now, that's the webinar opening from me. Our next section will be with Pia and Tuomas. So Pia, you're our first speaker. You are Managing Director of the Finnish Venture Capital Association. Welcome. I look forward to your presentation. Thank you.
Well, my name is Pia Santavirta. I'm the Managing Director of the Finnish Venture Capital Association. We are nowadays actually the biggest Nordic association here in Nordics, representing venture capital and private equity investors here in the Nordics, and that's very fun. We have altogether 175 members at the moment. And what we do is actually communications and lobbying activities, and of course we share all the statistics and define best practices, and we have a lot of events and networking meetings together with our investors and sometimes with startups too. But let's see, I'll try to share my presentation. And so, but these are the Finnish people who are doing, our Finnish venture capital investors who are doing investments into startup companies and family offices and corporate venture investors. But in addition to these Finnish venture capital investors, we have a lot of different international investors also active here in Finland. So altogether 272 international investors have been investing into Finnish startups from 42 different countries. And here you will find 25 most active international venture capital investors who are doing deals here in Finland. We are so happy and proud of all of these investors. And of course, within our membership, you will find a lot of more different investors who are all the time active here in Finland. So go and talk to these guys too. And what else? Our Finnish VCs and international VCs are doing great job, and I have a great news for startups too who are looking for funding, since Finnish startups attract the most venture capital investments nowadays in Europe in terms of GDP. So I think that it would be a great idea to be a startup here in Finland, because you will get a lot of funding. There are Finnish and international investors who are all the time looking forward to work with you. So we go and talk to our investors. More good news is that until now we have seen 10 new unicorns coming from Finland. I'm pretty sure that we will see more of these coming up from Finland, and the race is on always with our Nordic colleagues. Even though we're all the time and always doing great cooperation with our Nordic colleagues, and so but still it's always good to have little competition, right? Going on. Okay, and then next week you will find out our new statistics. These are from year 2020. We are always happy to share this record-breaking news, but you will get the new numbers next week on Thursday. So we will share all our latest statistics on Thursday. So you will find all the information from our website and from our social media in English too, of course. And if you want to learn more about our markets, subscribe to our newsletter, and there you'll find all the information. Also follow us in Twitter and LinkedIn and so on. So we are happy to share all this great news from Finland and from the Nordics. Thank you, and good luck for all the other speakers. I hope you will manage to do this better than I did with the slides. But this happens always. But thank you so much for inviting me, Adam, and good luck for the rest of the event.
Yeah, thank you, Pia. And we can always edit the video, so you know, any mistakes are gone. So thanks for that. So next up we have Tuomas. I hope I'm pronouncing your name right. I'm originally from Ireland, everyone. So you are an angel investor, founder of Hoppo.io and board member of the Finnish Business Angels Association. FiBAN Angels invested more than 50 million euros to early stage startups in 2021. So in your opinion, why is Finland a great country to invest in now?
Thanks, Adam. A great question. Well, I think there's many reasons what makes Finland a great place to invest, but one of the things I would like to highlight is the talent available for startups. We all know that the team is the most important part of a startup, and what we have been seeing here in Finland is some massive cultural change on how these startups are seen as employers. I mean, 10 years ago, startups was only for crazy people, like people like, well, Mikki Kuusi and Ilkka Pahlman and these people. But nowadays, actually, startups has replaced the big four as the most attractive places to work. So I think really the talent and the will to work at startups, that's really the big advantage here.
Great, thank you for that. And then in terms of the sectors that are thriving in Finland, could you mention any particular success stories?
Well, I think we have a lot of PSO'd already, many of them, but what we see in the press is a lot of big rounds like Oura or MariaDB or Relax. And then again, we do see also those big exits coming, so Wolt and Mobidiak and so forth. But then on the grassroots level, what we see at FiBAN is, for example, deep tech startups raising profile. But of course, traditional B2B SaaS is driving still the most of the investments regardless of the sector.
And in terms of your own angel investments, could you tell us a bit about your journey?
Yeah, I was myself a startup entrepreneur myself. I actually did a couple of startups. For some reason, I don't know how, but eventually I think I was successful, exited them. And since 2016, well, been still working in a corporate life on the companies that I've or both my companies, but since then I have been investing into 20 to 25 companies at the moment. So mostly B2B SaaS analytics stuff that I did previously.
In terms of getting investment, do you have any experience in that area when you were an entrepreneur?
Actually, not that much. One of the reasons I wanted to join FiBAN was that I started when FiBAN was founded. I tried myself to raise capital there, and I wasn't successful. And 4 years after that, we made the exit, and it would have been nice 26x for the investors for the valuation. So now coming back to FiBAN being part of the board and wanting to also fix things that didn't work at that point.
Yeah, I get you. And my other question for you was, okay, you're in Finland. What can be improved, do you think, in the startup ecosystem? Well,
first, I think we have to tap ourselves in the shoulders. So, I mean, all the ecosystem players, starting from SLUS, from Aalto ES, the Finnish Venture Capital Association, many others, we have done really great work on developing the ecosystem. It's a very different place than when I was a startupper. But also at the same time, we need to remember that this is a funnel game. And now we're harvesting the success that is coming out of the funnel. But we need to continue filling the funnel and managing the funnel. So I mean, in this place, the early stage is super, super important. So all the success that we are seeing at the moment, they have been putting in the funnel many years ago, tens of years ago. And if we compare, for example, to the school system, it's really important to get it right from the daycare on. And what I mean by this is that it's really hard to fix the children in the high school if you neglect them in the daycare or in the elementary school. And it's exactly the same in the startups, that if you don't get the basics right at first, it's really hard to fix them later on. And at Höpö, my newest company that we are founding, we have been giving feedback and followed the development of more than 2,000 startups. And from this data that we see out of these startups is we can see basically how they are developing in different regions, what type of services are developing them to progress faster. And what we can see now in the Finnish different regions is that the capital region has done marvelous jobs in creating new startup ideas and developing them into a lucrative businesses. But then again, the other part that we see out of this data is that the outside capital region, there's major cities that where we actually have a decline in new startup ideas and also the progress of these startups. So maybe one of the things that we should focus is actually to learn on what makes the capital region so successful that this is, and take these learnings also to the other regions.
Yeah, thank you. And actually, I think that's a very relevant answer. I'm going to share the people here attending today, Tuomas, and we can actually see 38% of people come from Finland. So hello to everyone, kiitos for coming. But we also have many people in Denmark, Sweden, and the rest of Europe as well. So I really look forward to meeting many of you in September. And in terms of the people, what you actually do here, over half of you are founders or CXOs, another 12% are investors, venture capitalists, and then the rest is a myriad of of different roles. And most of you come from companies, startups, I guess, 1 to 10 people. But I can see we also have a lot of people in big enterprises as well. So welcome to you all. I hope that data is interesting. So Tuomas, thank you very much. We're going to move on to our next section, and this is our rapid fire talk section. And everyone in this section will have the same question, which is, what is the most interesting challenge that your startup has overcome? And our first speaker will be Mervi, founder and CEO of Antti.
Thank you. Hello. The most interesting, just to jump into the question or the answer actually right away, I think it has to be like 6 years ago when I founded Antti, and I realized right away that I wanna found a startup, a global scalable business, and that can be fundable. And I also knew that I need a team, and even there has a lot of things happened during this more than 6 years that I've been doing. But I think the most difficult, by far the most difficult phase was to get the actual team on board. I did have a initial team when I got started, but around a year or after a year or so, I realized that that we maybe think differently, and they were having full-time jobs everywhere else. So we have to have these discussions that we go different paths, and that was like that was the hardest time of my life. So because it wasn't like 10 or 15 minutes talk that, hey, how about if I continue here and you go do you, but it was definitely difficult, and that was followed by a period of like one year approximately when I was working by myself. And that was, of course, full of work, really stressful. But then things started happening when I finally found Johanna, who's my other hand, or how is it, left hand. And then after that, the other good, talented people started joining the company. So that was definitely the most interesting and the hardest phase of my journey so far.
Mervi, thank you. And yeah, it takes your whole life sometimes doing a startup. So congratulations on getting this far. And next up, we have Christina, founder of Net Profile Finland.
Thank you, Adam. I don't have my own startup, or I had it a long time ago, but I am involved in several startups and I've been coaching several startups. So what are the most interesting challenges? I actually was thinking about the challenges that the startups that I work with have overcome during the past 2 years that have been extra challenging for everyone. And I would say that Mervi brought up the team, the discussion of the team. I think it has been very, very difficult for startups, actually in the first phases, in the early phases, to actually find a good team, because there are no venues to go to and bump into people and find new people. So that has been, I will tell you how that has been solved. But then again, another thing that has been really, really challenging is the mental health issue that all organizations have been suffering from, and especially startups, because there's a lot of pressure anyways. So mental health is actually one of the challenges that I have seen that they have actually cracked out how to work with that. And then serendipity, or basically lack of serendipity, of not being able to meet people randomly, which is actually one of the things that makes our life so interesting, and you get the ideas bumping to one another. So these are the kind of challenges that I've seen. So how have they fixed them? I think it's good to sort of give that. Maybe it's, I try to remind everyone about your mission. So when you remember what your mission is, you get that spark again, and you can have people joining in, because the mission is so important that if you can't keep that in your mind and you remind yourself about it, it keeps you on the track. So you get people involved, you get a good team if you talk about your mission, and also your mental health stays much better if you always remember what you're up against and why you are moving. And also, I think this period has been really interesting for a lot of startups because we spend a lot of time in all kinds of venues and traveling and meeting people. And I don't know about you, but I actually hate traveling because it's a lot of wasted time, most of it. So now we get to meet in Zoom and in Teams and in all kinds of places. So I would say that this has been the time for some people to actually go to hypergrowth. And the last one, nature is always a good place to go to when you feel that you are drained.
Okay, Christina, thanks so much. And next up, we have Sophia Lund, a co-founder of Oyama, a Senior Director of Brand and Customer Experience at Blueprint Genetics / Quest Diagnostics.
Thanks, Adam. And that's a long long title and description of who I am. I'm talking here with the experience of two startups. So I joined Blueprint Genetics, Finnish startups, but stand for a spin-off that actually was bought by Quest Diagnostics, a huge Fortune 500 lab company 2 years ago. So it's been quite the ride building a Finnish startup success story. So I have that experience, and I've also co-founded Oyama, which is a mental health ambition to bring therapy into the mobile phone. So it's two different words, a bit, Christine, what you're talking about as well, for entrepreneurs, for startups. Really about the mental health is a huge thing, but I'm not going to spend the rest of my 1 minute 45 minutes, which is the biggest challenge ever to speak in that short time. One thing that came to my mind was the challenge to sell something you don't have yet. I think that's because you have to believe so much in what you do. You have to have a story, you have to create a narrative, you have to create a vision, you have to really paint the big picture of where you're going, what you want to achieve, and what this product and this brand really is about. And you have to do that before you have anything, before you have people, you have money, you have customers, you have any like network or anything. So I think that is the biggest challenge, is really to push you in thinking beyond what you think you should define in what is it this really is about. Why are you here beyond making money? What is the greater purpose? And also, what is it that you actually are going to sell your first bigger idea? And what is the brand around that? Like, what is it that you really are creating? And to do that before you have anyone on board is super challenging. And you have to go to customers and you have to pitch it. You have to go to investors and you have to pitch it. You have to get people on board to your team, like people to join your mission before you have anything. And I think that is super challenging and something you should really, ask people around you from networks that have done it before, brand builders, business developers, like all these different people that would love to join in really pushing and helping developing what is that you actually are about to sell. What is it that you want to create? And of course sell, because most of us are in it for the money. At least it has to be it has to be at least not going on the negative side. But I think that's it really. So to sell something that is not there yet, and to get people on board.
Yeah, Kiitos. And next up we have Ots, Head of Sales at CloudVisor.
Hi, everybody. I'm glad I chose a challenge, as I'm the last one that nobody actually talked about it yet. So CloudVisor started as a service company. So there was no plan on a high scalable business or anything like that. So I think the most interesting challenge for us for the first 2 years was to see that this service company or business is very tough to scale, because you need more resource, then you can get more clients, more business. And I guess the most interesting challenge was to find this scalable model. And then since we are in the business of helping IT related startups with their infrastructure, if they are in AWS, we found a business model where we were surprisingly saw that nobody is offering what should be offered. And it's a win for AWS, the service provider, a win for the customer because they get more and pay less, and a win for us because we make also our margins from that, and it's very highly scalable. So everybody's happy, everybody's getting their money's worth, and it's the high scalability effect is there as well. So for us, the finding of the model that works, and we are kind of the first mover advantage is what we have, definitely is we're ahead of the potential competition, at least for a few years.
Thank you very much. Yeah, first mover advantage, very good. And I'll just do one more poll, folks. Are you seeking investment, yes or no? Because we're about to go into the VC section. And our speakers in the VC section, actually, I can share now. Our speakers will be Terhi Joanna Vapola, Vice President, Head and Founder of Helen Ventures. We'll have Marco, a Managing Partner at SparkMind.vc. We'll have Timu from Sophocus Ventures. He's a serial founder and investor. We'll have Hiri, co-founder and general partner of YesVC. And then we will have, Marcus, co-founder and CEO of Profina. He's also senior partner at Grow VC Group. So we will begin with Terhi Johanna. Given your experience, what tips do you have for Finnish startups and scale-ups getting funding in 2022?
So basically, I want to bring three things. So very super simple. You've heard this before, but those are the most important things to get funded. So it's the team, it's the market, and it's the traction. So if you can hit those nails well, you will get funded. So if you look at kind of the first market, for example, so really understanding that you have a big idea. So the VCs especially, we want to invest in something which really bring big returns. The risks are high, so therefore you need to target something where being and making big is possible. And also in terms of looking at the implementation, so when you look at that, be kind of honest how big the market really is. So when you look at what you can really target, what you can really make, and who are the other players in the market. So that's one part. The second part on the team. So it's all about people. We are the people business. So looking at the team, so I look at two things. So one is, you could say, this kind of intellectual diligence. So kind of a really being smart with your idea, really think it through. So actually do the homework. And then at the same time, execute all the time. So execute and get things done. So not just talk, but get done. So big visions, there are plenty, but and there are also good executions, but combining the two makes a difference. And then finally, all the VCs love the companies who don't need funding. So as far as you can go to actually show that the product market fit, show the traction, show the money you can make, show the growth you can make, that really hits the nail. So if you can get those three things right. And then finally, of course, you need to know who to target. So you might have a perfect startup, but it just doesn't fit into the VC's investment strategy. So understanding that, for example, us, we are sector focused, so we can't invest in anything else. So keeping that in mind, so you're targeting the ones who actually like what you're doing and it fits their strategy, and then read these three things, you'll make it.
Okay, thanks very much. That's a very good 2 minutes of advice. So we will go on to our next speaker, which is Marco.
Yes, hello, it's Marco Curran from SparkMind, founder and CEO of our education and education technology focused VC fund. So a couple of things I thought to address. First of all, we at here VC funds, we are getting a huge influx of deal flow at the moment. I think that's not anything special, but especially now it seems that sector specialists are getting a lot of attention and a lot of deal flow. So please differentiate, be crystal clear on your message, respect the processes by the VCs. They are there just to, save time for everybody and be most and efficient as possible. The other thing you should think about is the timing. Sometimes the timing is the key. So do not hesitate to contact us VCs earlier than or before you have the actual round. Do not hesitate to send brief updates, and of course always think whether you should focus on attracting angels first or go direct to the professional VCs and VC funds. And of course, stay aware of the possibilities of the public funding channels at the moment. There are a lot of tools and a lot of instruments out there in every and each country. And of course, the last third thing would be that always have a lot of options for your funding. So as you know, fundraising is really, really hard. Try to get honest feedback, try to learn from the feedback. And sometimes it's really that the 20th VC or investors really understands you and your story. So don't let down if you are getting no's. And of course, don't hesitate to have numerous discussions and processes at the same time. By being very efficient and repetitive, I think that's one of the keys to make you succeed.
Marco, thanks very much. And thanks. This is quite incredible. We had 2/3 of the people vote, are you seeking investment? And half of the people are. So I think your message will be very relevant. And I will say to event attendees, if you are looking for investment, visit our website. I'll share the link now, and you'll see a list of the speakers that we have at the conference. So next up, we have Timu. Timu, thank you very much.
Hello everyone. Thanks for having me. So my name is Teemu Malinen. I'm a digital entrepreneur and also investor from Sofocus Ventures. So we invest in purpose-driven founder teams that utilize digital hearts in their businesses. So my first tips is really, really simple. Be yourself. So it's so easy to draw those hockey sticks, but much harder to be absolutely truthful about your shortcomings in your business. So I advise you to be radically transparent in what areas are you lacking and also what you're searching for from investors. So because this all builds trust between you and your investors and also helps in identifying the right kind of investors for a business. My second theme here is that I advise you to make your business as adaptable as possible. So it means like fine-tuning your business engine against those constant changes in the market as quickly as possible. So how to be more adaptable? Here's a few examples. So first, adopt a culture of experimentation. It means more doing, less planning. Second, use no-code and low-code development tools to get your MVP faster to the market. Third, build your digital heart by using composable business methods. Think Lego bricks that you can rearrange at will whenever the market changes. And fourth thing, use hybrid thinking. So that means like mixing old and new in innovative ways. An example, turn your recurring revenue into a growth loan. It's called revenue-based financing, which you can couple with the regular types of capital. So quick summary, be yourself, be radically transparent, and make your business adaptable. Thank you.
Timu, thank you very much for that. And next up, we go to San Francisco, to Yuri.
Hi, everybody. Greetings from Switzerland, actually. I'm fundraising. It turns out VCs have to fundraise too. And I'm here talking to our investors in Switzerland right now, even though we're based in San Francisco. I just posted on the chat, I don't know if everyone can see, there's a link to a deck I actually made for founders who come to pitch us to help them pitch better. And it's really, really easy. I can give you one tip and one tip only that guarantees your startup's going to get funding. And that's the key difference actually between when we hear Silicon Valley founders pitch versus when we hear European founders pitch. And here's the difference, and this is the tip. Valley founders, like if you just did YC Demo Day, for instance, pitch demand first. So that's basically like the previous VC said, traction first. European founders typically pitch product first. And traction trumps product. So essentially, the best founders don't even build a product. They only build traction and only start building a product after you have demand for something. And you can raise actually VC, and we've invested multiple times into founders who have no clue what product they're going to build. They can only show that there's some category, some group of people that has demand for something. So if you think about it that way, it really, really simplifies your process of building a startup, because it means that you basically spend all of that time that you would normally spend building a product, hiring engineers, all those things you need money for. it would turn into you basically just running different experiments. For instance, running Facebook ads, Instagram ads, coming up with a way to demonstrate that you have something that has demand. You get people to sign up on a landing page you've generated about a fake product you haven't even made yet. And you just watch the conversions. When you can show a long wait list of people who are interested in something that you might launch in the future, you can think about things like crowdfunding, Kickstarter campaigns. It's all in this space. That's really where I recommend you spend your time as a founder, so that when it comes time for you to go pitch a VC like us, you come showing, look, I haven't started building my product yet, but I've got 10,000 people who've signed up for my email list who are all interested to hear when I launch something. Okay, so just think about building a company, demand first, product second, rather than the other way around. And you're much more likely to raise financing, and you're much more likely to succeed because you already know who your customers are before you start building. Thank you.
Yuri, fantastic. I didn't expect that. Thank you. And next up, we have Marcus, who I believe is in San Francisco.
Yes, that's right. So thank you, Adam, and thank you guys. Yuri, great thoughts. So from my point of view, I came here about 8.5 years ago. And the one thing that's always been pushing me, I mean, I grew up in the US, but I still returned from Finland about 8.5 years ago. And the one thing that's always struck me is just how competitive it is. And I think this is as much for the startup founders as it is for the VCs, that there's competition on all levels, that you have to be the best. And this is something that I would say that is just the most fantastic thing, because you get to show up and you get to compete. And the ambition level for founders and investors in terms of what they're looking for, it is absolutely astronomical. So I don't mean to stereotype. Of course, there's brilliant people all around the world. Silicon Valley does not have a monopoly on talent by any means, whatever they might tell you. But that being said, a lot of times you'll hear questions like, how does this get really big? And when you hear that, we're not talking about 10 million in revenue. We're talking about how does it change a paradigm? And then you'll hear the second question that, okay, once you've changed the paradigm, what then? And this is something that in the best conversations that I've had happens in the first 4 or 5 minutes of the conversation. And that kind of shows that you have this competitiveness and this ambition level in the conversation that at least I find incredibly motivating, because those are the type of problems that I want to actually pick at and try to solve. So at the end of the day, this comes down to knowing yourself, knowing what type of companies you want to build, but also knowing what you want to invest in. Because all of these things, they're going to wake you up at 3 a.m. at night, and you're going to have to want to think about them. And to be honest, there's not a lot I'd like to think about at 3 a.m. I'd like to sleep. But at the end of the day, if you have something that wakes you up, just make sure that it's actually something that you're passionate about, that you actually want to build. And this might seem incredibly fundamental, but there's a lot of companies that are building products that I don't fundamentally think that they're actually want to spend the next 10, 15 years on. So just making sure that you know what you're actually doing and you have that commitment, then after that, you can go out there and compete properly.
Marcus, thank you very much. And that closes our VC section. So now we're going to go into 7-minute conversations with international scale-ups. And the first one is Personio. Personio was founded in 2015, and now I believe it's worth over $6 billion, according to a Google search I just did. So it's a classic example of a startup that has grown so much in a short amount of time. Now, our speaker in this section will be Ruhana. You are the Customer Growth Manager for the Nordics for Personio. And can you first tell me what Personio does to begin with?
Thanks, Adam, and thank you for having me here. So Personio is an all-in-one HR software for small and medium-sized companies. So we're based in Munich, Madrid, London, Dublin, and Amsterdam. And our common ground is to make HR processes as transparent and efficient, focus on what matters the most, and that's people and strategy, right? So the Personio solution includes human resources, recruiting, payroll, and supports the core HR processes that every business needs to do. So we have nearly 5,000 customers today operating in over 80 countries, I think. So that's really great.
Brilliant. And I suppose then just going into this, in terms of attracting and retaining talent, which you guys specialize in, why is this an extra important topic right now? Is there anything extra important for HR to think about in today's work climate in general?
Oh yeah, I mean, as you mentioned, it is an important topic today, especially this year after 2 years of pandemic, right? And when you see a clear pattern amongst employees wanting to develop. And we do see that a lot of decision makers have come a long way in the subject, but there are also many who do not mention, for example, employee strategy and the HR function as a high priority in the businesses. So that's why it is such an important topic to raise. I mean, it is a very competitive market and companies will need to be even sharper in their HR function to attract the best and the most relevant talent in the so-called competition of talent.
Great. And you mentioned employee strategy. So why is that so important in your opinion?
Employee strategy, I mean, first and foremost, what is it? So it simply means a long-term plan for achieving and implementing set goals after set vision for personnel work. So, and I believe that behind every business, there is a fantastic team, and a fantastic team requires a functioning HR. And here it is required that there is an effective employee strategy where you really spend time understanding why talents leave, making sure that there are career opportunities in the business and that they feel productive in their work. Here, I think it is important to tackle the parts that the business has difficulties with and set its strategy accordingly. I think at Personia, we believe that people are the company's biggest assets. So when the company's employee strategy is not well planned or well thought of, this costs not only employees, but also the business as a whole. So with the potential to provoke a cascade of negative results, such as poor staffing, damaged employer brand, and poor productivity, this can ultimately cause a significant impact on the company. So just by prioritizing the employees and taking a more strategic approach, I think, to the employee management, employees have the opportunity to run their business results to the positive.
Cool. And do you think as the world becomes more digital, digital tools will play a bigger role in keeping employees, not just getting them, but retaining them too?
So, I mean, how can digital tools solve some of the challenges, right? So I have two answers to that. The simple and the short one is use Personio and you'll solve all of the challenges at HR. But giving you a more unbiased solution to it as well, just looking at the conducted survey we did, where we received about 5,000 responses from HR decision makers and over 7,000 employees. I think what came out of it was that 36% of the employees say that their productivity is drained by too many digital tools. And I think almost 50% of HR managers or employees say that they lack data, resources, and tools to best support their organization. So how do we solve this? Well, you can solve these challenges by having simple and as few digital tools as possible, or more automated processes in your job that kind of erases the manual task. So you also minimize the effort it takes to learn 1 million systems. So it helps employees focus on the right things instead of also focusing on handling time-consuming systems and tasks.
Great. And obviously, retaining employees is important. One way to do that is to make them feel like they're growing every day in the company, that they're developing. What tips would you have to make that happen?
How many do you want?
3.
3. Okay. Yeah. Okay. I think my first step would be as an HR function, create clear picture and understanding of what it is that actually make employees leave. Although salary is sometimes a factor, it is actually mainly the feeling of low productivity, the search for skills and career development that makes that talent start to thinking about changing jobs. So I think that's my first tip. I think the second one would be to spend time building a sustainable employee strategy. Again, coming back to that for your company, where you put resources on tools that allows employees to do the job well, but also allow them to feel productive, needed, and seen. And number three is to have a a feedback culture in the business with clear development plans, feedback meetings, goals, so that the talents understands why they're talents, but why they're also so valuable, and of course how they can do an even better job. So in this way you could build loyalty and the feeling of security, motivation, and satisfaction in talents, who then also choose to continue to stay and continue their career with you. So please invest in a good performance and development management. I think it will save you time, and it will also help you to retain your talents.
Okay, thank you very much. And we are hosting an event together in June about these kind of topics, so I'll share that in a moment. Thanks. And next up, we are going to have John Cutler, a product evangelist at Amplitude. John, welcome. So John, you're an expert in the field of digital products. I think you focused on them for 15 years so far. So can you tell me a little bit about how the digital product category has evolved, and what is a digital product in the first place?
Yeah, I'll start with the last question too. I think what we're seeing in the last couple years is completely blurring the lines of what is a digital product, because you see a lot of native digital product companies pivoting outside of the traditional world, either into banking or into physical goods or into bringing my coffee, which should arrive in 15 minutes, right? And then you see non-digital product companies like mega brands that exist or other things starting to sell NFTs or doing lots of interesting things. So just to the second question, I think that we're seeing a lot of blurred lines around what a digital product is. I tend to use the definition that it's using data, design, and technology to create sources of sustainable, differentiated growth. How you apply that really varies a lot, depending on your context. So, whereas maybe in the early 2000s, late 2000s, we had mobile apps and SaaS apps, now the lines are very blurred at the moment, which is very interesting.
Very big changes in just a few years. So basically, in terms of your experience then, startups have played a big role in the rise of digital products. Obviously, lots of companies like Facebook came from absolutely nowhere. What trends do you see at the moment in the market in terms of digital products?
One of the classic curves is this idea of systems of record, systems of engagement, and then these kind of systems of collaboration or systems of intelligence or and although there's faults with that particular model, I think that's one general trend we're seeing, that it's not just enough to be engaged by yourself in a product or maybe just sort of in a social environment. You're seeing co-collaboration, co-creation of things. You're seeing massive platforms and ecosystems develop. I mean, this is a crazy story that should be inspiring also for startups, but one of our biggest customers, Anheuser-Busch, so that's Anheuser-Busch, it's as old as a company as you can get, is just now sort of figuring out how to create on the ground B2B ecosystems in South America for grocery stores. So, you think if you're too heavily in the kind of creator world, or the world that as a pretty advanced kind of digital native, you can tend to forget all the opportunities that are existing out there for startups all around those things. So Anheuser-Busch is probably buying startup tools to do that too. So it's a very interesting, not sure if I answered the question, but it just reminded me that there's a lot of cross-pollination of ideas, which is very interesting.
Yeah, don't worry. Those are the best kind of answers, I think.
Okay.
And in terms of actually, I know obviously Amplitude, you talk about this way of having millions of seemingly unconnected actions, but actually they say a lot about a person or a company.
Yeah, I mean, one thing to think about is that you take something like Net Promoter Score or any of those particular things, you're basically asking a human to predict future behavior, and people are terrible at that. They're absolutely terrible at predicting future behavior. So kind of loyalty is what you do. And so at Amplitude, just due to the nature of the data that we help our customers collect, you really see how rich and chaotic and interesting actual behavioral data is. So, often startups come to me and say, what should we track? Should we track, 7-day retention or something? And I say, start with what human beings are doing with your product. Like, what are they actually doing? And because I think that goes to, if you're in a startup and you're attempting to figure out product market fit or doing whatever, it's easy to get distracted by a lot of vanity metrics and surface level metrics. But back to that point, that it really is about their behavior with your product and how that relates to your product strategy and what you're expecting them to do. So start with what people are doing with your product versus sort of some kind of vanity metric, et cetera. That's a good place to start.
Yeah, and could you actually give us an example of a vanity metric, a false positive?
I mean, daily active users. I mean, listen, if the VCs are on the call, they know exactly what I'm talking about. Like there are industry standard metrics that people look at. And obviously those are interesting, but most of them are very lagging. They're not a predictor necessarily of future performance. They're just sort of lagging. And so, an example of vanity metric would be like daily active users or, something page views, or that tells you nothing. And in fact, if you're a skilled product manager, there's ways to move those metrics in the short term that have no bearing on the long term. I think it was Yuri or someone was talking about, the products and trying to nail that early fit, but you really want to look at your product for the value producing actions that you think exist in that. And are you creating those kind of behavioral loops and growth loops in your product? So yeah, daily active users doesn't tell you very much, unfortunately.
Yeah, and there's a lot of groups, for example, we have 1,000 members, but they're not actually active. So I get what you mean. But
yeah,
look, we'll host an event together in July, which I'm just posting in the chat now. It's free to attend like this. You're all welcome to come.
Yeah.
Thank you, John. We're going to move on next to Frank from Twilio to talk about customer engagement.
Yeah, absolutely. Love Twilio too.
Yeah.
Cool. All right. Talk to you soon.
Hi, Adam.
Yeah, good to see you again. Long time no talk. Yeah, so Frank, maybe you can just quickly tell us about what Twilio does, and we can get into the conversation about customer engagement.
Yeah, definitely. And thank you for your time, Adam, and everyone. Good to see you. So just a high-level overview of what Twilio is. We are a customer engagement platform that really enables any business or developer to embed any form of communications within their business, and thereby giving them the ability to really scale communications on the platforms or through the mediums that they choose to. So this could be SMS, it can be WhatsApp, it could be email. And so really we're in the business of democratizing communications at scale, essentially.
Yeah, no, a lot of startups talk about growth, getting new customers, but I think a lot of them fail to focus on retention. And as a result, yeah, they get a lot of people, but they don't sign up for a second month. Do you think that is a real issue with startups?
I think it is a real issue with startups. And I think, as we've heard during the discussions today, I think the most important thing for a startup when they're looking to scale is really trying to do things that do not scale in the beginning. I think at the beginning, you're running a range of experiments, and really what you're trying to understand as you're looking to achieve growth fundamentally is, am I building for the right customer at hand? And also, in order to do this, it's really going to revolve around how you're communicating with them, how you're engaging with them. At Twilio Startups and at Twilio, what we've seen is that it's become so competitive in the startup landscape, and everything is ranging for our attention. And so really the key way to distinguish yourself as a startup is through how do I communicate with my startups, and then more importantly, to retain this is now we're looking at that piece around customer engagement.
Yeah, and in terms of customer growth, then going back to that, what do you think drives it for startups?
I think moving away from, I think, what John Cutler said, which is, looking at vanity metrics such as, daily active users or, LTV or customer acquisition costs. I think some of the key things to focus on if you're looking at growth in general would just be, as I mentioned before, am I communicating with my customers? Have I identified who they are firstly? Am I communicating with them on the right cadence? And then once you've done this, you can then focus on retention. But I do believe at the earlier stages of the startup's growth, around like that pre-seed seed stage, it's really doing experiments that don't scale, identifying who your target customers are, and then creating a series of loops or experiments to ensure that you are communicating with them on a consistent scale of frequency before you then launch your product.
Yeah, no, we did a poll earlier, and I'll just say the results, no surprise, like in most of Europe, there's a huge concentration of maybe 70% B2B startups versus 30% B2C. It's quite the opposite of the United States in many ways. What do you think of this in terms of customer engagement? People are still using email, still using LinkedIn. Does that surprise you?
It's not a surprise to me. I think what we've seen is that email is still the most ubiquitous form of communication. It's still the most dominant form of communication. I think we did a study and we saw that there was 85% of businesses would still utilize email predominantly as the primary driver of communication with their customers. What I would say is that email is a fantastic channel to utilize if done correctly, but there's a substantial amount of work that goes into that. And also, whether you're a B2C or a B2B startup, really understanding who your customer is and how you're trying to convey the value to them through email marketing or transactional email can unlock a ton of value. But I think businesses are going to need to transition beyond just looking at email, whether you're B2B and B2C, to look at, for example, SMS, WhatsApp, a variety of different channels. And I think the compelling component here with Twilio and what we've done with Segment and with SendGrid is we have that customer data platform that sits behind us. So with the acquisition of Segment, what matters more than anything now is really being able to understand, as I mentioned, Adam, when is the right time to send out that email or to send out that SMS. And so, as we're looking at how the landscape is transitioning, it's about the timeliness of communication as opposed to just the volume and the speed or the frequency of the communications that go out across email or SMS or WhatsApp.
Yeah, and what do you think then are the most important components of customer experience?
I think the most important components of customer experience is just really understanding who is your customer and why do they engage with your product or the solution that you have. I think, we've done studies, as I mentioned before, we did another study whereby I think 95% of customers just felt that both startups and businesses, large incumbent businesses, did not really listen to them and were miscommunicating with them, which really flags and highlights that a lot of businesses don't get it right. A lot of startups, don't understand how to engage or why they're engaging with customers. And so really the best practices are, through the use of focus groups, interviews, one-to-ones, understanding how am I communicating with my customers? What is the right channel for me to communicate with my customers? I think the challenge there is how do you operate this at scale? When you've got 1,000 customers to 10,000 customers, this is where the challenge is, which is understanding the frequency, the mode, the right channel at the right time. And so really, I think the best advice we can give to startups is really thinking about, A, what are you building, or who is the customer that you're building for? And then what is the necessity for me to communicate with them, and then understanding what the cadence is, and then applying that at scale for as many customers as possible.
Brilliant. Well, thank you, Frank. As always, really appreciate it. And I will share a link to the free resources and credits that you have in the Twilio Startup Program. Thanks very much. So next up, we have Freshworks for startups. Sumitra, we're going to talk about how to build a customer-centric startup.
Hi, Adam. Glad to be part of the conference again after the Belgium edition. And yeah, you guys are doing a fantastic job. Thanks for having me.
Yeah, it's we still have 626 people connected, which I'm very happy about. So can you tell me a bit about Freshworks then, very quickly what you do, and then we can get into the conversation.
Absolutely. So very quickly, an overview about Freshworks, what we do and the startup program. So Freshworks is a B2B SaaS product company, which operates under customer experience and employee experience space. We were founded way back in 2010. We are headquartered in California. Overall, 150,000 plus customers across different countries. What we do is we play under different domains around sales, marketing, customer support, employee retention, employee engagement, and so on. What has been our journey is basically we have been historically funded by 4 investors: Google Capital, Axel, Sequoia, and Tiger Global. We raised money in terms of $400 million before we went public. So right now we are a publicly traded company on NASDAQ, and that's where we are. We started as a 6-member team here in India, but now we are close to 5,000 employees across 14 offices. And talking about Freshworks Startup Program, this is a 2-year-old initiative. I head the program for EMEA as a region. In this program, the objective is to help founders scale fast and smart. We don't want them to be repeating the same mistakes which others have already done, or we have been there and done that. So we help founders on 3 levels. Number 1 is credits. We give credits across Freshworks suite of products. Second is engagement, where we open up leaders, mentors, resources, and content. And third is access to ecosystem, where we open up our network of 1,000-odd investors and accelerators that work with us. And through that, we see Founder Connect and multiple other opportunities. So yeah, that's us. That's the program. We work with close to 8,000 startups. And yeah, this is across, I guess, 87-odd countries that we operate in.
Great. And what do you think then really matters when a startup is building a customer-centric startup?
So let me first try to define what customer centricity actually means. In today's world, thanks to the exponential growth in the connectivity and emergence of so many cloud players, it's comparatively very easier to build a digital identity and in turn a business as well, right? But what we tend to forget, or what is the reality is, on the other hand, the power still lies with the customers. So today, a customer might be reaching out to you from any channel. That means social media, WhatsApp, email, chat, calling, your website, and so on and so forth. Through these channels, when they come to you, it is expected that you as a business know their entire context, their history, for you to have a better conversation with them. And this is irrespective of the fact whichever team, they could be reaching out to sales, marketing, support, business operations, finance, or whatever. They expect you to have that same context and real-time identity about you. For example, let's say if you look at Amazon, right? So if you go to Amazon and if you have a query about a particular refund, or you want to know about a particular product or an offer, it's expected that Amazon still knows what you have done with them in the past and knows what you want further ahead as well. So with this shift coming into play, it's very important and imperative that businesses relook at their customer centricity and how they are looking at their customer experience. Your different departments needs to be talking to each other. Sales needs to talk to marketing, and then to customer support, and so on. So when you are running a campaign, when you are doing a marketing activity, that information needs to be passed on to your sales team so that they have a better context on the conversation and they are able to close that customer better. And eventually that journey needs to be passed on to your customer success or account management or customer support team, so that they convert that customer into your evangelist, right? So this is very important, and that's why we at Freshworks are also rethinking of how companies should delight their customers and how omni-channel customer experience can be defined in today's world.
And actually, on that note, do you think there's sometimes a huge divide between the marketing and sales teams?
Oh yeah, absolutely. It's a age-old battle, and it's basically they need to act in cohesion, and it's essentially adding on to one top-of-the-line business number for the company. So what we need to relook at it, rather than drawing the lines, it's important what data needs to be shared and at what frequency and at what context between both the teams, so that they all work towards a shared goal, and it comes across as a unified experience for the end customer. So it's really irrelevant when you're looking at customer first and then working backwards from there.
Yeah, and for example, some things I've seen in companies is the marketing team, they just want sales, so they'll market the product, sell the product. That's one thing, but then the people who have to deliver the product will have problems because maybe the marketing and sales teams promise something that couldn't be done.
Absolutely. See, I'll give you an example. Imagine you get an email or an SMS from Amazon that, hey, why don't you buy this product? Or customers who have bought this product have also looked at this particular range or whatever, right? They're trying to sell you something. This is marketing team's job. But at the same time, you as a customer realize that there are 3 pending support requests or, whatever, some refund requests going on with Amazon. So that's a broken CX or a broken customer experience for me. So, hey man, you first need to solve my queries and then you need to sell me whatever you want to do, right? So that's why it's very important. The data and the conversation which enters your company, it could be at any point, has a unified flow across teams. Then this kind of challenge or this conflict can be solved for, is what I believe in.
Yeah, don't use Excel, guys. You know, it's 2022. Yeah. Well, thank you.
Yeah, please don't do that. Yeah.
Sumitra, Danvayad, I think you're in India. Thanks very much. Really appreciate it. So folks, now we're going to go on to a new section. We're back to rapid fire talks, and this is with angel investors, accelerators, and incubators. We're going to have Jaakko, Tarmo, and Henna. Jaakko is angel investor and partner at Granenfelt Finance. Tarmo is angel investor and industry leader at PwC in Finland. And finally, Henna is head of strategic partnerships and community at Sting. She was named the Global Startup Awards Global Ecosystem of Hero of the Year last year, which is amazing. So Jaakko, we'll start with you. And our question for you is, what is the biggest mistake that you see Nordic startups make when they're looking for funding?
All right, thanks, Adam. Really glad to be here. It looks like an amazing event. Now, obviously, there's a lot of pitfalls when you're trying to raise funding, but one of the most surprising ones that I've noticed is that the company fails to convey the message clearly enough so that we can understand as investors what the company is really doing, what they're offering. Is it an application? Is it a service, a SaaS service? Is it a hardware product or something else? We go through a lot of decks and presentations every day, every week, and it's surprisingly common to run into a deck where it's difficult to find out what the company is really doing, what the business model is, what is the product, etc. The message needs to be very sharp because you have to stand out somehow. Well, you have to stand out and you have to be able to, tell your story to the investor so that he or she can decide fairly quickly if this is something for me. And that's really the first hurdle that you have to cross. After that, there are many other hurdles to cross, obviously. And well, if you can't relay that message to the investor, then it's going to be very hard to find the ones that are really a good match to you. And that's really one of the other messages that I want to give to any startup founder in this session, in this event. Don't be discouraged. You will get a lot of no's and a lot of no replies, but just don't be discouraged. Keep the message clear, what you're doing, what the business model is, who your customers are. You should be all right. Don't go high flying too much.
Yeah, it's all the numbers game. Thank you, Jaakko. And next up, we will have Tarmo from PwC.
Yeah, hi to all. Best regards from Portugal today. So I took a bit of kind of a mathematical approach to this situation and took a look at the Finnish business angels investment numbers from 21. What the numbers say, they actually say that 56% of the angel investments, they return less than the original investment. So the kind of multiple is less than 1. So imagine that. And 96% of the kind of companies seeking funding from Finnish business angels, or 96% of those, they did not receive the funding. So, and then all in all, 626 companies were seeking funding. So what could be the conclusion? It's not maybe the quality of the founding team. It's maybe the high valuation. Maybe it's the runways running out. Maybe it's bad timing. I would say that then the conclusion based on the numbers is that not that all companies should be seeking for funding because they're unlikely to get it. It's a basic fact. And then if they if they get the funding, it's eventually resulting bad returns for the investors, less than invested money. In 56% of the cases, it's a bad news for the startups and also for the founders. So if I just take a bit of a negative approach on this topic, that the startups would need to take a look and really think of what they're after. maybe the idea that they're working on is not the best one they could be working on. There's another one they would need to jump into. So something very different maybe from my side today.
Okay, Tarmo, thank you very much. And next up we have Henna.
Thank you for having me. Good to be here. And thank you, Jaakko and Tarmo, for sharing your clues as well. I'm also taking this from my employer's perspective, so more like an accelerator perspective, since we are coaching startups and how to avoid the certain pitfalls that we see that the startups usually make when they are raising funding. And for us, the most three common ones that I would like to highlight here is probably first, not to dilute your company too much too early. So there is also something that we know that if you give away too much from your company too early on, it becomes almost impossible to attract future investors, and you will need the second and third and fourth rounds and so forth. So be smart then when you're raising the first funding, that you don't dilute way too much of your company. So that would be the first one that I would like to highlight here. And the second one is probably also addressing the fact that it's a two-way round. So it's not only the investors who are making the due diligence about you. It's very important that you actually pick your investors and select those kind of like people that you want to be committed. It's a very long-term commitment. So be very careful that what kind of investors do you want to have. It's also the people that most certainly are becoming very attractive, becoming a part of your board as well, and a very active member and taking a part of your company in that sense. So it takes two to tango. So be careful when selecting as well your investors, that what you want to get. And third one, when we're speaking here in the Nordic conference, I think it's also important to highlight the fact that there are a lot of soft money out there as well. So there are public authorities offering different kind of like calls for startups, for them to also to able to get those kind of like funding opportunities, especially companies addressing SDGs. I think it's very actual. So check those open calls as well. That might be very suitable for you.
Okay, Henna, thank you very much. And next up, we have our first panel discussion of the event. Here we have Ann-Christine, founder and president of West Musa. We have Ari, co-founder and CEO of Elo Health, and Mikko, founder and chair of Sentient Media. And what they all have in common is they are in the United States, and they're all originally from Finland. So it should be a very interesting topic. You're all going to have 3 questions in this 10-minute panel, and I'm sure that your answers will be very different. And my first one is, why should Finnish startups go to the United States? Ann-Christine, I think we can start with you.
Yeah, I think of course it's a big market and a lot of potential and growth, but you also have to remember that there are 50 different states and very different law and different thinking in all the states, and so you have to be prepared for that. But I feel it's the business climate, the business culture, and inspiration here is. Maybe that's the reason why I stayed so long here, and I like it, and I help many startups coming to the US.
Great, and I'll do that question again. Why should Finnish startups go to the United States? Ari, if you don't mind.
Yeah, certainly. Thank you. And I think the US, as Ann said, it's the single biggest market with the single language and relatively unified legislation that we can all understand. And you have a few hubs here. Think about the Bay Area, San Francisco, where I'm located. You have New York, and then also Austin, that are really amazing with all the culture and also the support network you have there. And to be truly, thinking about it, it's not that difficult to go to the US, to New York, for example, than to go to Germany from Finland. So I think those are kind of the benefits that you have in this big market.
Great. And Mikko, that question for you.
Yeah, absolutely. Yeah, I'll offer a rule of thumb that I've applied a couple of times and seen applied successfully, and that is that you should go to multiply your demand. So don't go to hire, don't go to build product or even to sell, unless you can clearly make a case that you can multiply your demand somehow, whether it's unlocking new verticals, unlocking investment you couldn't get elsewhere, which will in turn multiply your demand. Apply that to your decision whether to go to this market and see where that takes you.
And having Been in the market for a long time, living there, what do you think is better about the United States ecosystem that could be brought over to Finland?
So I'll choose to interpret that as a policy question. So Finland can definitely learn a few things, and one of them is that I don't think you should try to replicate Silicon Valley elsewhere, because you can't out-invest Silicon Valley. And at the end of the day, this place's biggest advantage is the deep pockets, because like with all speculative investments, the more times you can afford to fail, the more times you have to land that really big win that then returns your portfolio. And so what Finland could be doing, and again, so I'm thinking of this from a policy lens, is over-investing, over-indexing the rising tides that look to be the big trends that look to be producing global unicorns, for example. So like unapologetically invest in local copycats, because if you're able to get on that rising tide, you can capture value, create and capture value locally and regionally, instead of having, let's say Silicon Valley pedigreed companies come over to Europe and capture most of that value and bring that back to Silicon Valley investors.
Yeah, and Ari, I think I could see you agreeing. What's your take?
I think Mikko was very eloquent about his points, and it's about the capital, it's about the talent, and then the environment of finding the market. And of course, those all come together in the US in many places. And having been in Silicon Valley for 15 years, it is a pretty unique in the sense that you actually have world-class capital, world-class universities. You have a huge amount of capital. Half the VC funding comes from this area. And then, of course, you have these incubators like Y Combinator and others. But I think, Finland has done a lot of those. Of course, the capital we can't replicate. We can't find, hundreds of billions of dollars. But we do have the whole Aalto. We have Slush. We have a lot of these pieces already there. And I think it's happening also in other places, like in Stockholm and in Estonia right now. So I'm pretty optimistic. And I think, a lot of the good ideas have been taken, but the capital part you can't replicate because there's a finite amount of money in the world.
Great, thank you. And Christine, I'll bring that question over to you. What can Finland learn from the American startup ecosystem? Interesting thing about you is you're not in Silicon Valley, you're in New York. I think a lot of startups, the stereotype is just Silicon Valley, but actually you go to Georgia, you go to New York, you go to even Minnesota, there's startups. So it would be interesting to hear your take about New York.
I think it's the business mindset here in New York, and also that you are ready to work hard and play hard, like this old sayings that then you can be successful, like for Finland, to learn more about that and also to be open-minded. And I also noticed during the years that Finland is much better. You cannot compare it how it was like many years ago. So I really think Finland is doing good, but just even more business mindset and this business culture and climate, and to have courage and confidence and trust in yourself. I think that's very good to be successful in the US.
Yeah, and as the founder and president of your own successful company, what tips would you give to people to follow in your footsteps?
Yeah, I think it's, as I already said, this trust and confidence and courage is very important, and to believe in yourself, just be inspired and dare to do things, and also be ready to ask questions. Don't be shy, ask questions so you learn more, and also have a good team with good advisors. Don't try to do everything yourself. Trust your advisors and your team. That's very important here in the US.
Thank you. And I will bring that question on to Mikko.
So I'll distill this advice to one core rule again, that there's, and I've learned this the hard way, both in good and bad, that there's only two core jobs in a startup. You either build or you sell. And you should always plan your company accordingly. And so you have jobs that either create value or capture value. And you should also apply that to yourself as a founder. Or that's a lens that you can also apply as an investor if you're looking at teams and looking at companies.
Okay, thank you. And Ari, I think you can have the closing word.
Thank you. I was in a first employee in a startup or company year 2000 building Web 1.0, and after that, having found a few companies in Silicon Valley. I think the key learning I have today for myself as well is that build global companies. We have 30 people now in Elo. Yes, we have a few people in the Valley. Yes, we raised money here, but we have people in 9 countries already, including Finland, Estonia, and Denmark. And the second point, don't be lured into this idea of free money from government grants and loans and lock your IP into one country. That can be a very, very big problem in the future. And I've been unraveling many companies who try to later become US entities or move out of Finland. So there's no free money. There's always strings at that. So be careful about that.
Okay, well, thank you very much. Very interesting 10 minutes of discussion. And now we're going to go on to a 15-minute discussion between me and Denise, co-founder and co-CEO of Infuse. So yeah, if you could just tell us about what Infuse does and the basics of your story before we get into the questions.
Yes, absolutely. So Infuse is a service provider for the financial industry. We provide services around card issuing, digital transaction processing, and top it up with some value-add services to bring world-class user experience for our customers. Our customers then being fintechs, financial institutions, banks, merchants. So there is a big variety of who our customers can be, but it involves digital money and transaction processing.
Great, and I see your title is co-founder and co-CEO, which is more and more common nowadays. Could you tell me about how you met your co-founder and how you first went into business?
Yes, so my co-founder was supposed to be with me here today, but unfortunately they couldn't make it. We've known each other now for 15 plus years. Started off as me being like she was my customer. I was on the delivery side of the table, and already back then in that composition we found ourselves to have really fruitful discussions, and we're challenging each other. And just a few years later she joined my side of the table, and we started to build a new business proposition for the company we were working at back then. And from building that to others, various players, we then 6 years back decided to found our own company to challenge how everyone else was doing this business, and to build something that can be globally scalable. So through business we met, and in business we are.
Brilliant. And would you two have very different skills from each other?
Yes, so I'm more on the financial side of things. I'm trying to figure out how to make money out of what we do, and is more on the business planning side, and she's more from a technical background, so she's really deep into the tech understanding. So in that sense, our early days careers were really different, but then again, then we are really like-minded when it comes to goal settings and how we like to challenge the business and how we drive business forward.
And you seem to mention that you've had more than one business before. Maybe give us an idea of how many things you've tried.
No, actually, this is our first own business. So, but we were known here in the Nordics a little bit to be, it's not only us, but we and our team were building new ways of digital processing. So it's our fourth time that we built similar type of platform when we did it for ourselves, but we, through other companies, we then built it for others before. But this is our first business, first joint business. So yeah, first time we try it out.
Yeah, and when you were starting your business in the first days, how did you come up with the idea? Did you see a problem first and find a solution for it, or was it another evolution?
No, I would say that it's the typical journey of what I've heard so many others say. So we were in the industry. We were doing similar things for our employer, and we saw great opportunities to really change the way we were doing things, and also enabling scalability for our customers. But our employer back then, they did not agree on our visions. They were really happy where the company was at that moment and their own limitations to scalability. So that was the end of our journey there, or that's when we realized that, okay, this is as far we get here. But we still saw the opportunities, and we still had the will to challenge and to do things differently. And it was back in 2016 when the number of new fintechs every year, it was just evolving all the time. So we knew that the direction where the industry is going, some challenging needed to happen. So we saw an opportunity and we grabbed it.
So you were two people. How long did it take you to hire your first hires, and how important was that?
Yeah, I think that the first 100 people have been important, but going from 2 to 5, that was quite a fast journey, because we are, on the paper, we are 5 co-founders. So me and Monica still really business minded and building the proposition. We needed to have the tech-focused co-founders joining, and also from the compliance side, so financial authority and all that. So we hooked up 3 more into the founding team. So we were 5, and then it only took us about 3 to 4 months before we hired 2 people. And then it was kind of in that pace that we went on for the first 1.5 years. So every quarter, 2 to 3 new joining. But it was really about cash management, time to market, great balance. But I still see that every hire, even though we are over 100 people, the advice just back like either create value or then sell. So you build or you sell. And I still think that the 6 years old, 120 people, every hire should still count for something. There need to be a purpose. They need to bring value still today.
And is there anything particularly unique you believe about employing new people?
Well, I think it's difficult in the beginning because at least we tried to create superhumans out of every hire that we made, because the requirement list and what we wanted to achieve out of everyone was just like miles long. And in the end, we have learned throughout many trial and errors that there are no superhumans out there. So you really need to prioritize, and you need to understand what's most important now. And I think the profiling of the need and weighting every capability against each other, that's key, especially in the beginning.
So a lot of people in the audience, like me, are early stage. My company has 2 people at the moment, including me. And my question is, like, I'm working a lot, but does it get more challenging or harder or even easier the more and more you grow?
So I used to say at home that, yeah, I know it's a lot right now, but it will get soon. It will get easier. Like next quarter or next year, it will get easier. It never does. So like ignore that belief already from the get-go. Once you stepped into this life, this is how your life is going to look like. But it's changing all the time. The people joining your journey is your biggest asset, but it's also giving you the biggest headache. So yeah, it's different being 5 doing everything, things you know, things you don't know, but it's in control. So then the more people you get, you can narrow down your own contributions. But then you have to deal with having people involved and aligning the people and making sure everyone is striving for the same direction. So it changes, but no, it won't get easier.
No, okay. Well, that's really good to know. I suppose then, what was the most challenging time in your business, if I could say it that way? Was it when your business was smaller or when it was bigger?
Like looking back, we have had ups and downs coming and going. We can look at a weekly basis, quarterly basis, or yearly basis. So I think I've had a couple of real downs from my own perspective when I've just like really questioned, is this the right move in life? Am I willing to put this much effort into it? But the great thing then with having co-founders is that we have never dipped at the same time. So when I'm really down and questioning, is it worth all the efforts, all the hours, all the headache, all the stomach pain? The others have been there and cheering along that, of course it is, like we'll pass through this as well. But yeah, so it's on different levels how the pain's been there, but it's coming and going. And I think what you need to understand to cope as an entrepreneur is that you need to find the belief so strong that you won't give up as soon as it gets hard. Just understand that it will get hard, but the reward will get bigger and bigger as further down your journey you get as well. So it's kind of what's exciting and painful at the same time.
Yeah, and on that point, let's go to something positive. Do you have any milestone, whether it's small now or still a big thing, that you're really proud of?
I remember the first like ad we put out for hiring, because like I would say the first 15 hires we did from within our own network. But when the first time was that, okay, we don't have this person within our own network, we really need to try to go and find a person from outside. So that was a huge milestone getting there. And then the exciting part was people were actually applying. Like we were not that old as a company, and people were applying and interviewing. Why would you come to Enfuse? And I'm still proud of every time when I'm like on the onboarding part of new people joining. I have my own session there, and I tell about the story, why the company was founded, the mission, vision, values. And every time I get to tell this to the new joiners to my company, I get so proud. See them listening into the story and really being excited to be part of my and our journey.
Yeah, and you've mentioned missions and values a few times. How important do you think it is for you and your colleagues to all have the same vision?
I think that's crucial. So looking at us as founders, like the five of us, we are really different, different in personalities and skill sets and way of communication. I think what's binding us together and what we always take a look at in difficult time is why we founded the company. What was the mission? What did we set out to do? And where are we taking this business? So we shouldn't give up too early, or we shouldn't sell off too early. We have the vision of becoming number one within our field. So let's continue building on that. And then the values, I truly believe that they should be guiding how you build the company. And that's also a big portion of how you get all the new joiners to really breed the Enfuse way, how we deliver and how we bring value to the customers. So yes, I truly believe in those. I didn't believe at all being employed. So that's also been my challenge. Like I understand how it is to be on the other side of employee-employer relationship. And that's why we also put a lot of emphasis into why we believe those are important.
And I think a good question to close with is, what are you most excited about right now in terms of your company going forward and perhaps FinTech as a whole?
So there are much happening at our side, but we are really building a more pan-European presence at the moment. So we are setting up the UK office, the Amsterdam office, Riga office. So there are like a lot happening like broader than Finland and the Nordics. And that's a new step for us. And I like the challenge in this. And at the same time, we are starting to take a small peek at how our Series D will look like, what are our next big growth steps. And that's coming then by end of this year, early next year. So there will always be change. And that's also like why this industry is so appealing to me, is that's ever evolving change. Like, don't settle down, don't think that you know and have a grip of things, because there will be curveballs and there will be change happening. And that's the exciting part. Like, I don't know how next quarter or next year will look like.
Or next week, you never know in business. Well,
Yes.
Kiitos, Denise. I really enjoyed that. Actually, it's the first time we've had an interview like that. So thanks very
Thank
much
you.
and good luck.
Thank you for inviting me.
Thank you. Now we have our final section. I will introduce you both now. Aija, am I pronouncing your name right? Probably not.
Aya.
Aya, okay.
Yeah,
The J is always like a U.
Yeah,
okay.
it's difficult.
Yeah, and also Vilma.
Hello, great to connect and great to see you again. How are you doing?
Yeah, really good. Actually, we still have 450 people connected, which is great. Good to see everyone. So we've got a really, really interesting 15-minute discussion now between Vilma and both of us. So I'm going to start with you, Aya. Earlier on, I showed that Finnish startups raised $2.1 billion in 2021. That is 6 times the $335 million that was raised just 5 years before. So you're the interim managing director of the Finnish Business Angels Network. What do you think explains this crazy, incredible growth?
Well, probably because FiBAN was established in 2010. And I believe that the first years were spent more in organizing the activities and recruiting angel investors and building the industry. So it took some time before the industry took off. And then the round started to get bigger. There was like pre-seed, seed, Series A, Series B, the rounds got bigger. And of course, we have been working very closely with FVCA and other players. So the cooperation and building the industry has taken time. And the success stories has generated more success stories. That's in brief what I think.
And you mentioned success stories. Are there any in particular that you'd like to talk about?
Well, I've been here only since September, but the latest big success stories has been like Avon and Volt companies, as everybody probably online knows about.
Yeah, great. Well, thank you for that. And Vilma, we have a very interesting story with you. You're co-founder of FiBAN Chain. I hope I'm pronouncing that right. A 5th-generation blockchain network valued at over $2 billion. You are also an angel investor with a portfolio of 68 portfolio companies, including 3 unicorns. Now, you recently secured a $100 million investment from GEM, Global Emerging Markets. Can you tell us more about this and how you achieved it?
So respect the previous question, I would still like to focus on that's what influenced also our success. I believe that deep tech focused Finnish companies as well as gaming has mostly benefited from the COVID. So that was my case as well. We were finding expensive problems in circumstances when people feel the need the feeling of belonging, have been isolated of the society, need alternative methods of connecting with each other. And I think that behind our success, there's of course determination, but mostly the restructuring of the society due to COVID. Secondly, opening up of internet 3.0 in different measures as everyone was isolated inside of their home. I would say time spent on mobile devices, as well as the fact that mindset of new type of opportunities instead of staying in the same industries where these employees had been before, such as, for example, aviation or many service industries, were replaced by new ways of communicating and behavior models. So I would say that our success was based mostly on right place at the right time, opportunistic timing in terms of social circumstances, and the feeling of emotional belonging into a like-minded community, or also industry knowledge, as well as deep tech from the perspective, for example, in Nordics, it's I would say the most funded sector. And from my experience, due to the fact that we were focusing on what is concerning the minds of the humans due to COVID, I think this wouldn't have been happening before COVID, but this was exactly the right time for it.
Timing is everything, I guess. And in terms of when you looked for investments, obviously you have 68 portfolio companies. Do you often have people contacting you and they don't know anything about who to connect with? They're just reaching out to any angel investor or VC, and a lot of startups are getting that wrong. What do you think?
Yes. They should definitely be focusing on sub-industry categories of VCs that provide them concrete domain knowledge, as well as people who can relate to the industry where they are operating, as well as people who they can resonate with. So as a VC also myself, I really clearly acknowledge that there are some type of industries that I cannot provide additional value, as well as I have very clearly defined who I can exactly help. So I would recommend anyone looking for funding, not just from the size or geographical perspective, but also from domain knowledge, as well as previous shared experiences. So I would definitely touch base on any existing previous network or innovation hubs, accelerators that you can find from your cities that have something shared on your previous domain knowledge of the subject that you are currently working on, due to the fact that, of course, it's not just capital, it's mostly social capital, relationship capital, as well as in the growth factor, there is some much more than those three aspects. There is the personal relationships and continuous human behavior matching between the investor as well as the builder. So it's more about what kind of personality in the industry which you are interested in are you looking for, and you will find that, and obviously they will provide you more resources than anyone who cannot resonate with your past.
Great, thank you. And I actually bounce off of that. Do you think we're seeing a trend where 10 years ago you had tech investors and now it's HR tech investors, recruitment tech investors? Are investors becoming more and more specialized and narrowed in what they work in?
In FiBAN's case, we have recognized that the gaming industry is a big hit, and health tech and med tech are also very popular, and that's why we have own screening boards for those industries. But they are definitely getting stronger. And of course, it's interesting, we cooperate very closely with the Business Finland VC, for instance, and they are building new funds like metaverse and new industries like that. So I don't know, it's a combination of various things actually. But our angels currently and maybe during the last 5 years have invested mostly in business services, healthcare and medtech, plus clean tech and bioeconomy.
Right, and I imagine between the two of you, you've seen thousands of pitches. How many are actually good?
Quite few.
Quite a few.
Vilma, would you like to start?
Okay, so the problem is normally that they focus in what it is, not in how does it help and what is the size of the problem they are solving, how expensive is the problem. So I would definitely say that there are very large challenges in terms of communicating the value transfer as well as the revenue streams and as well as the unique selling points. I would say that if anyone is here doing their own pitch deck right now, to focus on quantifying the market value, quantifying what do you do for who you benefit and how, as well as the revenue streams, as well as revenue model, economic model. Or investors invest because we want to see how the company will make money. So I think that that's one of the key aspects that is right now lacking in terms of quantifying exactly what are the viable manners of making money, as well as quantifying more concretely the timelines, as well as understanding your competitors and having spoken with your competitors as well as with your customers. So I often ask, so as you believe that you know your customer, have you ever spoken concretely with multiple of your customers? And in many cases, they haven't had a conversation with their customers. They haven't neither understood that the revenue models might need ABC, maybe it's not viable at the time frame which they hope so. So mostly in pitch deck there is a lot of hypothetical frameworks and dreams and hopes, but we would definitely, at least from my perspective, I would love to see a little bit more factual facts as well as understanding of the market and your competitors.
Well, Vilma was very thorough with her analysis, and I don't know if I have much to add, but one thing I would like to add, that the dynamics of the team and the competencies of the team, that's very crucial, and the commitment of the team. Like our angel investors regard it very important that the founders are 100% committed to the company, and they really believe in it, and they are really inspired. And so the attitude is very important, and the hunger to win and succeed.
I suppose what's interesting is, Vilma, you've got funding not just from Finland, or maybe not from Finland at all, but from a Luxembourg-based company, from other companies abroad. What is the difference between raising money in Finland and other countries, in your opinions?
I would definitely say that approach is more fast process normally, as well as compliance is faster. And I would say, of course, the ticket sizes are larger due to the fact that Finland is very entrepreneurial, exceptional quality of talent as well as projects, but still the funding amounts are on the smaller medium size. And I would definitely say that Finland, I see most of the VCs focusing in very few categories and approach. They are more open in terms of adapting to change slightly faster. In Finland, the process is a little bit more structured. It's agile, but in a few industries, not overall in the whole startup ecosystem per se.
Great. And Aya, what do you think is unique about raising money in Finland versus from other countries?
I don't know, Jyrki Engström described it perfectly when he said that in Finland, founders focus on products. So the pitching is product driven, as in US it is demand driven. And that is, in my opinion, the key. And I don't know, at FiBAN pitching events, SaaS services are very successful. Maybe it relates to the fact that many of our investors have a technological background, and Finland is a very high tech and strong in technology. So it might relate to this. And of course, this health tech, healthcare, med tech sector, that is very strong as well.
Great. Well, I think that's all our questions, and we're finishing right on time. So Vilma and Aya, I really want to...
You are amazing, Adam,
Yes.
how you did this evening, like big applause.
Thank you.
Exceptional work, yes.
Exceptional. Cool.
Yeah,
Well
and guys, as I mentioned, we're going to be in Helsinki and Stockholm and Copenhagen in September. We're also, if you visit the link startupnetwork.eu/Nordics, we've gotten a kind 15% discount from Arctic 15. So I'll be in Helsinki in June, on June 7th and June 8th. So let's meet in June, let's meet in September, and hopefully we can stay connected on the online forum as well.
Yeah.
Vilma, Aya, all the speakers, all the attendees, I really appreciate your time. It's 2 hours already. Thank you so much. Kiitos.
Our
Thank
pleasure.
you. A pleasure.
Thanks for having us.
Thank you, Aya.
Bye.
Thank you, Adam.
Bye.
Bye.